The newspapers called it a market in turmoil, the worst stock market plunge since 2001. But as investors assessed the fallout, others were speculating about who might be next. David Weiss is chief economist at Standard & Poor's.
You've got AIG sitting there, you've got WAMU sitting there. There's a lot of other candidates for the next person to take a fall.
After the forced buyout of Merrill Lynch and the collapse of Lehman Brothers, some of the focus has shifted to the world's largest insurance company. AIG, the American International Group, guaranteed many of the mortgages that fueled the housing crisis. The company is struggling to stay afloat after its stock tumbled 60% on Monday. But with over 100,000 employees worldwide and some 17 million customers, analyst Mike Santoli says failure is unthinkable.
If there's a company that seems too big to outright fail, AIG would probably qualify.
To avoid a market meltdown, central banks in Europe, Asia, and the United States are pumping billions of dollars into their financial systems to ease credit fears. Stock trader Howard Wielden says the crisis marks the end of an era.
We are entering into the final chapter, I think, of this credit market crisis. That is not to suggest there isn't a lot of worse, bad news to come, that there aren't a lot more shocks to come. But the one factor that we should all be very aware of is that credit will again never be the same as it was 1 and 2 years ago.
It may also signal the start of more mergers and more acquisitions. Thomas Cooley is Dean of Economics at New York University.
I will be surprised if we don't see Morgan Stanley finding a partner and possibly even Goldman Sachs. We see the same kind of contagion spilling over to companies like AIG. So it's definitely a very, very volatile and rather scary time in Wall Street.
While negotiations continue to sell portions of Lehman Brothers' assets, investment bank Goldman Sachs reported third-quarter profits declined by 71%. Arcega, VOA News.